Money did not begin as power. It began as a tool. Over time, that tool changed, not because money changed, but because the systems around it did. Every law, every crisis, every expansion left its mark. To understand where we are today, we need to understand how we got here.
You know, we take it for granted that a dollar is a dollar, no matter where you are in the United States. But what if it wasn't? Today, we're going to unwind the incredible story of how America went from total financial chaos to creating a system that would literally shape the world. Just imagine this for a second. You're driving from New York to New Jersey, and suddenly the money in your wallet is worth less, or maybe it's not even accepted at all. A cup of coffee could cost you $1 New York dollar, but $5 New Jersey dollars. I mean, how could you possibly run a business? How could you even plan a simple road trip? It sounds like a nightmare, right? Well, that wasn't just some crazy thought experiment. For the brand new United States, that confusing, chaotic system, that was the starting line. The country was born with a massive, massive money problem. So what did this problem actually look like on the ground? Well, let's just say that public confidence was inconsistent. And honestly, that's putting it mildly. See, on one hand, you had the reality of the situation. Different states were all printing their own money. This meant wildly inconsistent values. A dollar from Massachusetts might be totally worthless in Georgia. This created a huge barrier to trade and a really deep, corrosive lack of trust. The goal, the dream, was a single national currency where value was standardized and confidence was universal. The big question was, how in the world do you get there? Faced with this economic chaos, the nation's early leaders knew they had to act, and act decisively. This led to a series of really bold steps, all designed to forge one single, reliable currency out of the mess of many. Okay, so the blueprint for stability was basically a three-step process. First up, centralized banking. You had to take the money printing power away from all the individual states and give it to a single national institution. That was the only way to stop the flood of competing currencies. Second, standardize that currency. $1, one value everywhere. Simple. And third, and this was probably the most difficult step, reinforce trust. Because at the end of the day, without people's belief, money is just, well, it's just paper. So how did they build that trust? The key was backing the currency with gold. Now, this wasn't just symbolic. It was a concrete promise. Every single paper note a citizen held was a claim on a real, tangible amount of gold that was physically locked in the treasury. That promise, that became the bedrock of public trust. Now, you might be thinking the US just looked at the old, established powers in Europe and, copied their homework. But that's not the full story at all. The American approach was actually an act of innovation. So instead of simply importing a system from Britain or France, the American founders took a totally different path. They studied the existing models like a student would, but they did it with the ambition of becoming the master. Think of it like this. The founders basically funneled in all the financial ideas from Europe. They kept what worked, but they filtered out the spectacular failures, the devastating financial bubbles and the runaway inflation that had plagued the old world. They saw how speculative manias had ruined investors and destabilized entire nations. So they built a system with more checks and balances, one designed to be more resilient. It wasn't a copy. It was a very calculated improvement. So the next time you look at our modern global economy, with its complex central banks and national currencies, just ask yourself, how much of that entire architecture was born from this early American blueprint? The answer, well, it just might surprise you.
History does not give instructions, it gives perspective. Money itself remains neutral. Time and interest decide whether it works for you or against you.